I'll buy you lunch. What do you want? I'll DoorDash you something.
Burger, calamari, just whatever.
Are you telling me that you have a way to defer the tax situation there? Is that what you're telling me?
Yes, absolutely. Yes. And so the first one I was referring to is a 1031 exchange, which only applies to investment real estate. The second one I'm referring to is called a deferred sales trust.
A real eye opener to see that there are ways that people can use the regulatory framework, if properly structured, to invest 1031 exchange dollars in things that you would not think were like kind to what they exited from. So it was very impressive. I got to say, you are the first one I've seen pull this off, and I'm pretty hesitant to believe in a lot of these kinds of things. So it's a major feat for me to say, wow, this actually really worked, and it was really cool.
1031 is a way to shelter your income when you sell the thing. The DST is a way to avoid the 1031 and not have to suffer the time penalty.
Our career and during different tax periods, we've seen, these tax avoidance, tax minimization, offshore, all these different strategies undertaken to minimize or avoid taxes. And then I can tell you that, some of them are just not worth the trouble. And so I was skeptical. Admittedly, I was skeptical. I thought, oh yeah, here we go, another one of these, right? And then they say, no, it really is different, right? So look more closely. We looked more closely. We had, honestly, 2 years of conversations. 2 years. Now we were being due diligence at the same time that we were doing due diligence, but 2 years is a long time to be, sort of flirting with the idea of and getting to know the people and getting to really understand the transaction. Yeah, long story short, we got comfortable, although we are not tax attorneys, lawyers, or estate planning attorneys, that at least, from an investment perspective, that, it made sense to sell a highly appreciated asset, get liquid, hold that in this type of a deferred or installment sale type of instrument, and then just be in a position then to do the most important thing. I'm probably stealing your next question, which is time. They say, well, you can't make more time. You can. The Deferred Sales Trust, in a way, allows you to lengthen the investment time horizon for those assets after getting liquid, but before having to feel the tax impact. And from an investment manager's perspective, time horizon is the most important element in investing.
All right. Hey, everybody. Want to welcome you to another Capital Gains Tax Deferred Sales Trust Mastermind, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options, and not having a clear plan is the enemy. And using a proven tax deferral strategy such as the Deferred Sales Trust is one of the best ways, if not the best ways, to create and preserve more wealth, especially in times like this. And what do I mean by that? Well, there's a lot of change going on. And there's a kind of a shift in the marketplace that is happening with inflation, with higher interest rates, with this changing in buyer sentiment and confidence in the economy. And more than ever, you want to be able to exit your highly appreciated cryptocurrency, businesses, and real estate and be able to be diversified, to be liquid, to be tax deferred, so you can create and preserve more wealth. And so during this mastermind, we really have three things we want to accomplish. Number one, we want to give you kind of the vision for what we're trying to do. What are we trying to solve for? And we're going to clarify that here in a minute. As well, deal close stories of the week, or story of the week, or kind of deal that we're working through. And then we're going to open up for questions and mastermind together to try to solve your problem. And the best analogy that we have for this is a Rubik's Cube. And this is a Rubik's Cube. Everyone shows up with a little bit different challenge they might be facing. It could be capital gains tax, right? It could be income tax. It could be estate tax. It could just be personal stuff like ready to move from phase 1 to phase 2 into retirement. It could be just low return on equity and you're looking to increase your cash flow, and a number of things. And part of what we do is we just try to solve problems. And I don't know if you've ever seen those spelling bee competitions where they answer questions and answer words really quickly, or even the competitions for these Rubik's Cubes where people can solve it in 6 seconds. So our goal is to try to get it to look like this, where it's congruent for yourself personally and for your cash flow and for your tax flow and for your family. And again, so you can create and preserve more wealth. And by the way, if you want to get started in a deferred sales trust right now, you can go to capitalgainstaxsolutions.com. We do have a special guest with us who is a cryptocurrency digital asset trader, as well has a massive securities background in stocks and bonds and investments, as well as an extensive real estate background. So I'm excited to have a deep dive with him in a minute. But before we go there, I want to bring in my co-host and one of my business partners, Mr. Jake Miller, Mr. Pierce York. Jake, how are we doing today?
Doing wonderful. Calling in from Miami. Was just at the Bitcoin Disrupt, the largest digital asset conference in the world, and it was definitely an interesting time. And I'll tell you what, things here in Miami, they have a different way of doing business. I'll just leave it at that. But it was a good moment to rub shoulders with some very powerful, influential people. Had a representative from the royal family in the royal family in Saudi Arabia with an office in Dubai that was there, to investment bankers, to a lot of different people who are looking to understand better the industry of mining digital assets. And so it was definitely a great time. And that brings us full circle to, some of the things that we're going to talk about here today on what to do when those highly appreciated assets are sold. So I appreciate that intro.
Absolutely. And Pierce York, what did the Deferred Sales Trust work for, and how is it, able to help people in times like this?
Hi, Brett. Hey, everyone. So yeah, the DST is a phenomenal tool for really any highly appreciated assets that you're looking to exit out of. We're that real home run in pretty much every state is going to be $1 million net proceed, $1 million gain, or 2 transactions of about 500,000 that'll kind of meet that $1 million threshold, $1 million gain, and it's just it's a phenomenal way to exit your assets.
Absolutely. By the way, it works for cryptocurrency, businesses, GP, LP positions, public or private stock, primary homes, investment real estate. Can save a failed 1031 exchange. So unlike a 1031 exchange, it only works for investment real estate. The Deferred Sales Trust works for really any highly appreciated asset. Okay, NFTs, anything you can think of. We haven't done NFTs yet, but we have done Ethereum and Bitcoin so far. But we do have ways to exit those things. And so, and of course, investment real estate, dentists, optometrists, commercial real estate properties, on and on and on. Thousands of closes, billions under management, over 26-year track record, 100% legal, and it works every single time as long as you're working with those who know how to do it. And this is what we do every single day. And so that leads into the kind of the deal close story of the week. And this one is a really interesting one. In fact, it starts about 12 years ago when I first started to cold call and talk with multifamily owners here in Sacramento. And it actually takes place in Placerville. And funny enough, our guest, who I'm going to introduce here in just a few minutes, one of his good friends is in Placerville and owns a ton of multifamily units. And it's about that same time that I started to talk with this gentleman. I was talking with these other clients of mine now on their property. And so they actually sold their property in Manhattan Beach, like a duplex. This is probably like 18 years ago or so. And then they 1031 exchanged into this property for about 1.2 million. And then they were already pretty depreciated at that point. And so they're looking at a tax situation where they're selling for about 2.5 million, but their basis is about $600,000. Okay. And so state, federal, Obamacare, depreciation recapture, they're looking at about, if you take 2.5 million minus the $600,000, you're at about a $1.9 million gain, right? And if you take that by 40%, that's $760,000 of tax liability. The second thing they were looking at, and again, remember the Rubik's Cube, right? Their situations, it's still going good. They're getting good cash flow. Things are going pretty good. But the other thing they're looking at is their return on their equity. And in other words, their debt was basically zero, just, I think it was like $30,000. And their NOI was about $120,000 per year. And so we did a analysis and we said, okay, what's $120,000? Divide it basically by $2.5 million. What's that return on equity? Let's do that math right now. You take 120, divide it by about 2.5 million, and that equals about 4.8% cash on cash, or your return on equity. In other words, like, what could we do to take this 2.5? Can we increase that equity, or can we increase the cash flow, and can we get the money working for you? So there's times to sell and there's times to hold. There's times to harvest what you've earned, right? And they've been adding value over the years, and they've been increasing the rents, and rents have gone up quite a bit these last couple of years. And so they're in a situation where it's good, but could it be better? And the other part of that better part meant not just financially, but also personally, right? There's things that have changed over the years, even in the last 10 years, especially in California, with rent control and eviction control and regulations and increasing insurance. And, last year there was this fire that came in, and this fire was devastating for the area. Unfortunately, Placerville was survived, but it put a lot of challenges on the marketplace. And so we went through actually 3 escrows. The third time was the charm. So the first 2 escrows failed. Part of it because we ran out of time. These fires hit. There was permitting issues. I mean, this might have been one of the most challenging transactions, but we persevered and we kept going here. And so finally we closed as of just 2 days ago. And part of why they closed was that they wanted to be able to not only defer the tax, but also increase their cash flow. So what did that mean? Well, on about $2.5 million, now they had to pay a little bit of commissions and closing costs. So I think they end up netting around like 235 total. Okay. They're looking at about an 8% is kind of the goal, about $188,000 in cash flow, right, from the trust. And that's from $120,000. So you take that and divide that. So 120 by 188. That's a substantial increase by about 63%. I think I'm doing the math right? So that's huge for them. They get to not have the stress of owning. They're now diversified. They now paid off a little bit of debt. They're tax deferred. They're transitioning from phase 1, which is very active ownership, to phase 2, and they're increasing their cash flow by about 60%. Like so these are all the check boxes on the right-hand side. And by the way, this was not easy for them just to, we'll just do the deferred sales trust. This was time and energy and planning and thoughtful questions and all of the things that everyone goes through before they meet us. And we're happy to provide that service. But it took a lot to close this deal, and now we're here. So that being said, Jake, I'm going to pause. Anything you want to pull out of that or questions you have on that, Jake?
Just that everybody's scenario is different. And this, although it's a financial tool, and though we recommend it to a lot of people that have a highly appreciated asset, we don't necessarily use it in the same way for every client. And especially when it comes to real estate, and the transaction might be somewhat complicated, or there might be multiple transactions, there's a lot that we can do to make them have a success. And again, getting us in early, helping us come to the table with the other advisors and the client and helping out is what actually helps the deal come through successfully. Had another client that kept trying to keep his advisors separate. So he would meet individually with the attorney, and he would meet individually with the CPA, and he would meet individually with us. And things were just not progressing for him at all, because he was having to digest all of this information, and it just was too much for him. And ideally here in the next week or so, Bray, he'll have all of us meet together, which is finally the point we've been trying to get to, so that we can say things and the accountant can shake their head, and we can sit here next to the client and the attorney can ask questions on behalf of the client for his benefit, things that he should know to ask but doesn't. And at the end of the day, when all the advisors are around the table, we save a lot of time. We end up with a solution that makes more sense for everyone in the room.
Very well said. I just think of the mastermind. Part of why we're here is to dissect and grow and share our journey, and hopefully share some wisdom so everyone can benefit from that. And again, back to the Rubik's Cube, like you're saying, like if you meet with one person, he does a little bit of a twist there, we lose 10% of momentum every single day that we don't make a decision, right? Like have you ever been on the wrong side of momentum? You don't want to be on the wrong side of momentum, especially when the time is shrinking for your deal, right? And that can actually run out of time. You do need to set up the deferred sales trust prior to the close of escrow, typically prior to the buyer moving all contingencies on most deals, except for investment real estate where we can save a 1031 exchange. But you don't want to be on the wrong side of momentum, and you also don't want to get analysis paralysis. And part of that, you're right, if you're looking at all these different specialists, why not bring everyone together so that each of us can turn, these things, especially this is a very large deal we're working on, by the way. We can do it all maybe in an hour, solve the problem. So I couldn't agree with you more, Jake. That's a great insight that you're pulling out on that one. That being said, if people want to learn more and start your deferred sales trust today, you can go to capitalgainstaxsolutions.com to connect with me. You can also connect with Jake Miller by going to strategictaxsolutions.com. He is the financial advisor. I'm the trustee. We work together on our deals. That being said, I do want to bring in and transition into our special guest today. He is out of the Bay Area. I did mention in the beginning that he actually introduced me, one of my potential clients up in Placerville introduced me to our next guest years ago. And we most of what we talked about in that time was just investment real estate and the properties that he was doing. And he is now the president and chief investment officer and general partner at a Castle Funds, and he has extensive experience in portfolio management, derivatives trading, and risk management. And for the past 10 years, he has been the managing member of 3 private investment funds, which invest in equities, options, exchange-traded funds, and commercial real estate. He began his career as an options market maker for Group 1 Trading LP and a few years later, he became a partner at Oppenheimer, Noonan, and Weiss. And he's been instrumental in the negotiation of the sale of ONW to SLK Hull Derivatives LLC, which subsequently acquired by Goldman Sachs Group, and all kinds of other stuff. But the main thing here for this guest, Peter Eberle, welcome to our mastermind, is he has an extensive real estate, securities, and cryptocurrency. And this is not hard. This is very difficult to find. You have typically those that are experts in maybe one, but Peter brings a vast knowledge and expertise to the world of digital currency. Peter Eberle, how are we doing today?
Good, Brett. Thanks for having me on today.
Absolutely. Can you tell us a little bit about your story and your focus for our guest?
Yeah. So as you mentioned, I started on the options exchanges, both in Chicago and in San Francisco. Formed my own company. We had 60 traders working for us at one time, and then we sold that company to Goldman Sachs. Heavy background, obviously, in derivatives and risk management. I ran Goldman's Pacific Exchange operation for several years, and as you mentioned, went into private fund management. I've now brought this derivatives experience over to the crypto world, and we run a few different funds. We're commodity pool operators, so we use Bitcoin futures and options on Bitcoin futures to mitigate some of the volatility in this very volatile market.
Excellent. And so let's talk about that volatile market for a second, right? So what is your take right now in the last 60, 90 days, and where do you feel like you're at today and moving forward in the next year or so?
Well, it's obviously been a tough 2022 in both equities and the crypto market. I mean, if hindsight was available, right? January 3rd was pretty much the peak in all these markets, probably the peak at residential real estate possibly as well. And we've obviously had a real de-risking in the marketplace since then. A lot of fears about what inflation would be long-term. Obviously, Ukraine and Russia's invasion didn't help that either. But we seem to have kind of found, at least for the moment, a little bit of a reprieve, right? The markets, both crypto and equities, behaving much more better here in July. Seemed like the end of June was really, for the short term anyway, the lows. And we focus on, the headlines focus on how far we've fallen in the last year. But if you actually lengthen your time horizon a little bit and just look at where we were in March of 2020, right? You look at Bitcoin was sub 4,000 less than 2 years ago, and here we're at 24,000. It's been a spectacular down from 69,000, no doubt. But if you have any kind of time horizon, as one of your speakers said in your introduction, right, lengthening of time horizon matters so much. And so we're still extremely bullish in this space. We're still in the early days. There's so many parallels to the .com boom and bust of 2000 that some of us older guys lived through and survived. And even if you would have bought Amazon, Netflix, Yahoo at the top in 2020, you'd still have made massive returns over the next 2 decades, right? In these names. I mean, I remember when we all thought Amazon was a bookseller and that's what they did, right? There's so much more now. And I think that's where we are in the cryptocurrency space. If you have a 5 or 10 year time horizon, I don't think you're going to see returns as high in any other field as you're going to see in the cryptocurrency space.
Excellent. Yeah, I think that's great insight, that the fact that, if you just go back, and not even like you're going back 10 years, you're going back a year and a half or so, and Bitcoin was 4,000, right? And the fact that it's 20,000, that's fantastic. Now the fact that it went to 68, 69 is a part of it, but that in itself makes sense. So that's a great perspective there to lengthen the time horizon, and not even that much more. So where do you think that plays into even real estate investing, even securities investing? Can you connect the three for us and kind of your overall philosophy on investing in different asset classes?
Absolutely. And I've got, my kids are in their mid to late 20s, right? And so they've all got jobs and they're starting to accumulate some money and some savings, and they come to me and ask me for advice on investments and things. And the first thing we talk about is time horizon. All right. Is this money that you need in 2 years? Well, if it's money that you need in 2 years, you need to be risk averse, right? If you've got some expenses coming up soon, I'm sure Jake would totally agree with this, right? Those monies need to be, unfortunately, not earning much, right? In cash or something like cash. And that's money you set aside. So if you have expenses coming up, a kid's tuition bill, a home purchase, that's got to be safe money. The longer your time horizon, the more volatility you can accept, right? And so if you have a 5 or 10 year time horizon, if you go back in history over our last 100 years in the US, I don't think there's a time you could have bought real estate or equities and 10 years later you weren't ahead of the game, right? I mean, that's just the natural growth progression. And the same can be said about cryptocurrency, though that's a much younger field, right? And definitely more volatile. So you want to have less allocated to the more volatile aspects, right? And have longer time horizons. Most of our investors that invest with us, they have from the single digits to a max of 10% allocated to crypto across multiple cryptocurrencies. But you don't put 50% of your wealth in something that has such high volatility. And then you can sleep at night, right? If it's a small allocation, then that volatility bothers you a lot less. If it's going to keep you from being able to pay your kids' tuition, you're going to lose sleep, and you should.
Very well said. And then when I had you on my podcast, and I'd like to touch on this as well, is kind of the difference between what castlefunds.com and how you guys have, again, taken your past experience and knowledge and expertise in derivatives trading into the crypto world. Okay, so would you talk about that and how you're faring differently than perhaps some of the others that are completely collapsing?
Yeah, absolutely. I mean, the first thing is we don't add leverage to crypto. We've had some headline companies, Celsius and others, that have completely collapsed. Three Arrows Capital, great firm, everyone thought, and all of a sudden they're getting liquidated because they're not meeting their obligations. Adding leverage to a highly volatile asset is irresponsible, right? Leverage to something like real estate makes perfect sense, right? You have something that isn't going to get liquidated on you because the value drops 5 or 10% in a bad market, right? You're not going to be auto liquidated as you are in crypto if you add leverage to it. Stock market, the max leverage they allow you to do is 50%, right? That's Regulation T. That's a risky environment too, to take on that much leverage in the stock market. You probably want to do less than that. But some crypto exchanges throughout the world allow 20x leverage, which just adds fuel to the fire, right? Then you have this incredibly volatile asset, and now you have people getting liquidated. So that's the one thing we don't do, is ever use leverage. What we do use options and futures for is it works like home insurance. We protect the downside so that when there are these larger moves, we will still suffer losses, right? I mean, this year, if the market's down 50%, we still lose some money, but we lose less because we actually buy some protective puts on the downside or sell futures against our position. And we do this in a tax efficient manner also. We're always very aware of that as well. So we use options to hedge some of that volatility and some of that risk.
Excellent. I'm going to open up to Jake Miller and ask a couple questions here and see if he can dive in and see any insights here. Jake, go ahead.
Yeah, no, I was just going to comment that I think that this is such a critical discussion at this time right now for a lot of our clients with Deferred Sales Trust. A lot of times we have a presentation here where we discuss what is the Deferred Sales Trust and how do people get into it. But this is very timely for a lot of our clients who really need to diversify. A lot of clients, the Deferred Sales Trust comes in after they've had the very biggest transaction of their lifetime, and they sold that cash cow business, or they sold that piece of real estate, or they sold whatever it was, that will help them amass an enormous amount of wealth, and that had grown over several different years. And now, just like Peter's commenting, people need to be a little bit more agnostic about asset class and take into respect the duration. Everything that Peter is saying is spot on. And clients need to align themselves with the trustee, with financial advisors, with other professionals, so that they can help make sure that they're getting into the right type of asset classes that have the right type of liquidity and time horizon attached. In the world of crypto, in the world of any market, so to speak, there's going to be risk associated with that. And does the client need the money today, in 2 years from now, as Peter mentioned with his kids? Or is this a 10-year time horizon? Is this something for the grandkids, legacy builder? A lot of these concepts, a lot of times people are being sold today by the glamour of something new and something that's wonderful. And hey, come and invest in this today. And they're not properly allocating a lot of their assets appropriately. In fact, every single day, our offices that we have in Utah, Oklahoma, Kansas, people come in because of something bad that they did. It seems almost every single day, somebody comes in with a horror story of hey, somebody told me to put my money in this. Well, why did you do that? Well, I don't know. It sounded good. It was something that was being sold to them rather than them having an understanding of what goals and objectives were, and then aligning investments with those goals and objectives. And with the Deferred Sales Trust, one of the great things that people have is a trustee, Brett. And so maybe Peter, help us paint a picture, I guess. What are the advantages that you would see clients having a trustee with a financial tool like a Deferred Sales Trust to help them as a fiduciary make conscious, deliberate decisions about their investments?
I totally agree with you that most people's investment decisions are often knee-jerk reactions, right? The press is so fond of jumping on the same stories, whether it's great stories about how great everything is or bad stories how bad everything is. But everybody's chasing these same themes, the next big thing, right? And greed and fear. We know those are the two things that dominate the markets, right? You get these excessive greedy times and you get these fearful times. So having an advisor that can kind of step back, right? Make it a non-emotional decision is so helpful for most people because it is highly emotional. As you say, these deferred sales transactions are often the largest transactions that a person's made. And so that adds to some of that scariness, right? What do I do next?
Absolutely. Very well said. And I also want to kind of dive in a little bit to the passive nature of Castle funds. By the way, you can learn more about Peter Eberle at castlefunds.com. And so passively managed funds in cryptocurrency, digital currency. So he says we offer a secure, liquid, and low-cost access to Bitcoin and other digital currencies. And then actively managed funds, we manage active portfolios across spot, futures, and option markets. And then proprietary technology. So we kind of established that you guys manage and help people do this passively, right? You guys are actively doing it. But then you have a technology platform that you've developed. So talk about that, how that's helped in what's happened here, right, with the downturn, and how are your clients feeling? How are you guys feeling? Again, I'm so glad that you guys weren't doing any leveraged amounts, right? And so perhaps it's the long-term nature of the ownership here. You hold long enough, and we are seeing it come back up. So kind of give us a feel for that and how you guys have done so far, Peter.
Yeah, and technology-wise, I think that's an important component is, again, we're talking about a highly volatile asset, and we are a privately registered fund. And so a lot of our competitors, they send out monthly statements, which is all that they're required to do. And in the meantime, their investors are in the dark as to how their investment's performing, right? And so the tools that everybody has access to now on discount brokerages like E-Trade or Fidelity, some of those risk management tools that an individual investor has access to weren't even available to us on the floor trading 20 years ago, right? So that's come a long way. But there aren't the same kind of tools yet for cryptocurrency trading, right? And so what we did was we actually built a portal from the ground up that we're actually going to start licensing to RIAs and to other investment managers where they'll have the same transparency. And so we keep all of our coins off exchange in third-party custody, right? We keep them with an actual trust bank so that they're not, they can't be hacked. They're not commingled with other assets. So they're kept completely offline. But our system can still see those coins. They can see the coins or cash when it's on an exchange for trading. We can see the coin or cash wherever it is. And so we're able to give our investors 24-hour, 7-day-a-week access, right? This market is different than the equity market. It trades day and night, right? It trades as much as in the Asian market hours as it does in the US market hours. So having that ability to actually see how your investment's performing and not just wait until the end of the month really is a competitive advantage, we feel. And we're going to be able to share that with select registered investment advisors as well.
Absolutely. I want to shift a little bit to real estate, right? Because that's where I originally met you, right? And then I found out the cryptocurrency aspect of it. So to talk about, because a lot of our clients are real estate, right? They're like not crypto, right? There's like the opposite of, in their world, although they're curious and they might dabble some, right? But talk about your extensive real estate expertise and investment, right? And knowledge. And then 2, how you've transitioned to do both, right? Talk about kind of that journey there.
Yeah, so I really got heavily into commercial real estate after I sold my trading firm to Goldman Sachs. And my brother is a real estate broker, a commercial real estate broker in Reno. I do have my brokerage license, so I've never transacted for anyone besides ourselves. And we invest in light industrial properties, so warehouses, that, nothing fancy. These are either, it can be small spaces. In Fairfield, we have a 20,000 square foot building that has tenants that lease from 1,000 to 4,000 square feet. We have other properties in Berkeley and Richmond and Reno and Carson City that just not very sexy properties, but highly resilient in economic times, right? Distribution, warehousing, automotive. So really the nuts and bolts of economy. So, we go through cycles of bust and boom a little bit also, but not as much as the office space, for example, is feeling right now. So that's on a day-to-day basis, my brother actually manages that business for us. We're always in the market looking for opportunities. And I've always been more on the trading side, right? First with equity options and now gone into cryptocurrency. It was kind of a natural transition for me there. But I wasn't super early to the game either. Castle Funds started in 2017. My brother and I joined as passive investors at first, letting someone else do the management of it. I joined Castle in 2020 after the Chicago Mercantile Exchange announced that they were going to start trading options on futures. And that's when I approached the team at Castle and said, there's some opportunities here. And then I came on and joined them as chief investment officer.
That's incredible. I love that background, and I love that you're entrepreneurial with your brother, and I love the light industrial, right? You guys stuck to a space, you kind of, expertise in that. You've owned it long term, right? You get the cash flow, you're getting the depreciation, and then you're a good team, right? I bet you guys complement each other well. What's your brother and your guys' take on light industrial? It seems like it's that, and apartments are the hottest, and it's not going away. It's only getting stronger. What's your thoughts on that?
Right. I mean, we're not aggressive buyers right now. We feel the cap rates are pretty tough right now. But if things back off a little bit, which, this market's softening a little bit, we notice it just on how many calls we get, from signage on buildings, or if we have an open space, and that's softened a little bit, but there's still a lot of demand there. I think we'll see in the next 2 to 3 months what this economy does, right? Can we orchestrate that soft landing that Powell is saying that he's hoping to achieve, or is he going to worry about inflation too much and sink us into something? I don't know. I am concerned about the office market in general. I think cities like San Francisco, it's going to be interesting to see what they do. I mean, they were building so aggressively and now no one's been coming to the office. The mass transit parking lot stations around the suburbs are very empty as people still aren't going into work.
I have a question for you. I'm going to put you on the spot a little bit here, right? A little bit of the hot seat. Right? So you have this light industrial building you've had for 20 plus years, I think, in Fairfield, right? And it's obviously rapidly appreciated, and let's say you guys might want to sell and invest into cryptocurrency at a low price, and you see the opportunity with prices dropping in crypto, and you have an all-time high maybe in the industrial property, and that might be a transition in the next couple of years with real estate maybe softening. At what point do you say, yeah, let's sell that, let's say it's a $5 million deal. Let's defer it into a deferred sales trust, and let's use the capital to invest into Bitcoin and Ethereum and these other things that you're doing and ride that wave. In other words, sell high and buy low. Like if I brought that up to you, what would be your thought on that? Like, what do you like most about what I just said?
Yeah, no, that's definitely in our mindset. I mean, if the cap rates are at a point where I don't want to be a buyer, maybe I need to be a seller, right? So there is some truth to that. The other thing about that Fairfield property is that it's a multi-tenant property, so there's a fair amount of management to it. So that would be an ideal candidate, right? Especially as we get a little bit older and maybe don't want to deal with tenant turnover and things like that. So for those reasons, it would be an interesting candidate for the Deferred Sales Trust. Keep some of the single tenant buildings that are much easier to manage. And as you say, I mean, I think what we're hoping to do is to bring up rents quite a bit in the next year or two, because they are smaller tenants. They're on shorter leases, as long as demand is there. And then a sale would be a potential, and definitely a deferred sales trust would be the thing. I mean, the big advantage I see of your deferred sales trust over the 1031 exchange is just the time, right? You're just under such a time crunch with the 1031.
Well, and plus the like kind requirement, right? Because if you did a 1031 exchange, you're just trading industrial for industrial, right? You're trading in a higher interest rate environment, maybe even the same cap rate environment, and you're just trading, your 10 tenant problems for 15 problems, right? And so what we can do with the deferred sales trust, which I think is so key and transformational, is to say sell high, diversify, and then put them into Bitcoin at 20,000, right? And ride that up to $68,000. So all of a sudden you bought low in the context where we were, a year ago with $69,000 of Bitcoin, and you're working that game, right? It's like it's options and futures tradings, but with real estate, all tax deferred. So do you mind if we dissect this a little bit? Because I'm just kind of curious. Like, what do you think? What do you owe on the property in Fairfield? And what's the basis, and what do you owe? What's the basis, and what do you think the sales price would be?
We owe nothing. The basis is extremely low, especially after depreciation, and your sales price was pretty spot on.
Okay, so is it
exactly? This is an awesome example. This is
okay.
great.
So we didn't prepare this, so I appreciate Peter working with us here. So so let's just take 5. Let's say debt is 0, basis is 0. Basically, we'll just use it simple math, right? State of California, is 5 the right number? I don't know if I said 5 or 10, right? So 5. Okay, and so if we take 40% of that, right, that's a $2 million liability. Right. And so step 1, form a DST. Step 2, by the way, I did sell a $8.3 million deal right there in Fairfield, a retail small grocery anchored anyways. But we sold that for $8.3 million a few years ago. But right there, $2 million is deferred. So you got $5 million in the trust. And what we would do, in my mind, how we would architect this is $5 million goes in trust. And by the way, if you own it with your brother, 50-50, just keep it simple, 2.5 into each of your own trust, right? And now you're tax deferred together, about $1 million each extra there, which is great. And then the trust can go actively with you via an LLC into your own fund that you have there, and your brother could do the same thing. And you can own that LLC, okay? And this is the cool thing. At the first part of it, you're a lender, but then you become an owner. I call this lendership, okay? You're first a lender, and you're getting kind of a fixed return of about 8% on that $2.5 million for you and $2.5 million for your brother. But then you can partner with the trust and become an owner of an LLC, and up to 80% of those funds. So in this scenario for yours, $2.5 million at 80%, it could be about $2 million. Not that you would put all $2 million into Bitcoin. You might even diversify it into a couple other real estate deals or stocks, bonds, and mutual funds and dollar cost average. But the point is, let's just even say you took a 500,000 of that $2.5 million and you dollar cost average into your fund and all the expertise that you have. In other words, you're actively managing that. And let's just say Bitcoin goes from 20 to 30,000, 30 to 40,000. all of a sudden you're creating all of this wealth on this wave, whereas the industrial property, perhaps it's pretty much maxed out. I mean, you might be able to increase rents by 5 or 10 or 12% as these tenants, leases turn. But at a certain point, interest rates are going this way. Cap rates kind of got to follow in a sense, and there's not that much more upside. So Peter, what do you like most about what I just said there?
Well, certainly the tax deferral is definitely the big thing. I don't really understand the partnering inside your own LLC. That part kind of.
Yeah. So Jake, you want to explain how that works? So he can get a good feel for that.
Absolutely. So we do that so that there's a maximization of the tax benefits that can flow directly. As a member of the LLC, you've got the clients themselves directly. And then as another member of the LLC, you have the trust, right? And so we want them to be directly recipients of some of the tax benefits that can flow through under those partnership rights in the LLC. But then, of course, we want the trust involved so that the trust can participate financially as another member of the LLC. So in that joint venture relationship, we can, instead of having the trust absorb all the tax benefits, which would then not flow through directly to the clients at that time, we would lose out on some of those tax benefits. For a more optimal scenario, we do it like this, so that the members of the LLC are able to participate on that one side. With the partnership rules, we can allocate, revenue, we can allocate expenses, we can allocate depreciation, we can allocate, a lot of those other tax benefits that might exist. And that's why we do it this way.
Plus the upside, right, Jake? So the upside, Peter, once you partner with the trust, you become the owner of the LLC. And think of the trust that owes you the money as just the silent joint venture partner. So you form an LLC, you're 100% owner at first. The trust comes in as a silent joint venture partner. And let's say it just puts up $1 million into that LLC. It asks for a 20% ownership of that LLC and an 8% pref. But Peter has put $0 into that LLC. Now, let's say you bought Bitcoin at $20,000, $1 million, and it goes to $40,000, right? A coin, right? That million has now doubled, right, to $2 million. So what does that mean? Well, let's say you did that in exactly 1 year time period. Well, and you were to exit at that point. You're like, okay, now's the time to exit. I just doubled my money, right? Great. The first million would go back to the trust plus an 8% pref, which would be $80,000. Which, by the way, remember when we set up the trust, we set it up as an 8% compounding rate of return. So we mirror that. So that's kind of like a wash. It's just going to go into there to pay you anyways. But that other 800,000, that million minus so it'd be about 920 at that point after you paid that pref. Okay. That 920,000 would be split 80-20, 80% to Peter, 20% to the trust. That 80% now, you can form promissory note number 2. Okay, so you have one trust. Remember, we started with 5 million, and you had half of that, just say. So now you have 2.5 million. And now you have not only 2.5 million on the original amount, but you have a new amount of about 80% of 920. So that would be $736,000. Okay, so versus if you just sat in that Fairfield property, what are the odds you get an extra $736,000 of wealth in the next year? Probably pretty low, right? So does that make sense there?
Yep, sure is.
Yeah. So anyways, that's the Deferred Sales Trust. If anyone wants to learn more about that, you can go to capitalgainstaxsolutions.com. You can also connect with Jake Miller at strategictaxsolutions.com. We absolutely love to map these things out, to take the Rubik's Cube and try to line it up, right, to fit. The other thing that you might consider is estate tax. If you're ultra high net worth and you're greater than 22 million married, 12 million single, it's no longer just about capital gains tax. It's actually about estate tax, which is above and beyond the stepped up basis, right? It has nothing to do with stepped up basis. And so you want to be aware of what your tax flow situation is. That being said, we are running out of time, and so I want to open it up for questions for anybody else in the audience. You can put it into the chat. You can also unmute yourself. You can ask Peter, myself, or Jake, even Pierce, all of us, about anything that Peter just said, the Deferred Sales Trust. Any of your thoughts, go ahead and put it in the chat or unmute yourself.
We do have a couple people here who are here for a very specific reason. We have Eddie and we have Connor. And these two entrepreneurs Eddie's in the UK right now, and Connor's here in Florida. They are excited to see how they're in the process of buying several businesses at once, and they want to know how this might be beneficial to the individuals selling their businesses to them. So a little different angle. A lot of times we deal with the sellers of a business. Right now, Eddie and Connor are the buyers of a business. How might this help their scenario and situation?
Great question. So they're looking to acquire businesses from others at this point. So looking to build their portfolio. And so at the end of the day, I always say we're not in the business of buying real estate, selling real estate, selling proprietary cryptocurrency derivative trading software, selling the Deferred Sales Trust. We're actually all just in the business of solving problems, okay? And to the extent that you can solve someone's problem is to the extent that you get paid and you win the deal. And so every seller that you're buying from has a problem. And the question is, are you able to dissect the problem, right? So like figure out like, yeah, so see how these aren't lined up correctly for what you're looking to do, whether that be estate tax, capital gains tax, income tax, cash flow, whether that be, your time, energy with your grandkids, your family, location, whether that be retirement or different things. Like, first of all, you got to dissect and make sure you have a good feel for their problem. And then you want to come in and you want to say, hey, I can solve that. I can make it look like this. How would it be if everything was more congruent for what you're trying to solve? In other words, what is your B, what you're trying to be, and what is your A, where you're at now? So the first thing is you always want to clarify what is it that they're trying to accomplish, why are they selling, and get below the first initial response. And then you say, you know what? If there's a way to help you come from A to B, and that could mean a deferred sales trust, and I could show you something, would you be open to selling to me versus every other one who's out there who's telling you to 1031 exchange or Delaware statutory trust or not sell and just do an installment sale with a traditional buyer? If there's a way to show you that, would you be open to just selling to me? In fact, we have found that if you can provide that solution, they're probably even more likely to sell at a lower price, right? Because you've solved a 30 to 50% capital gains tax and depreciation recapture problem. Okay. And so that's the first thing. You want to just define what the problem is and then approach it as a way to add value to them. And that the rest of it should follow. So Jake, any thoughts or comments on that?
No, I think that's helpful. In addition, there's maybe a comparison that I'll make that we have a client, it's a big conglomerate that buys up these storage unit warehouses. And they have actually put some of our material in their paperwork that they give the small mom and pop storage units that they go up and buy. A lot of times they have come across that one of the biggest hesitations in buying out somebody else's business or their storage units is that they don't want to pay the taxes right now. They don't want to pay it all at once. And, if this is the biggest transaction that they've ever had, oftentimes it's the most taxes that they've ever spent as well. And so to help them overcome this obstacle to selling their storage units to the big conglomerate, the big conglomerate provides them paperwork on the Deferred Sales Trust to help educate them on what their options are, because most people just don't know that they can have the transaction, they can receive the proceeds into the trust, and that means that they do not need to pay the taxes today because it's deferred.
Yeah, 100%. It's a mathematical equation, right? Do you want, like a Peter situation, do you want 3 million because split between your brother and you, or do you want 5 deferred? And then the next equation is, well, what can we go make on that 5 and how can we grow it? And then the next bigger one would be, well, if Peter's worth a certain amount, how do we get it outside the taxable estate at the same time? In other words, what are the problems? What are the challenges? And what are the options? And it could be a mix. Peter might do a partial 1031 exchange and a partial Delaware statutory trust and a partial opportunity zone and a partial deferred sales trust. Like, it's not a have to do just one or the other. We want to figure out what's the best solution. Capital gains tax solutions is part of what we're plural. We're not capital gains tax solution, just no S, right? We're plural. And we want to help you and guide you. Again, you can go to capitalgainstaxsolutions.com to learn more about that. Does anyone else have any questions or thoughts on anything that I just said or Jake said or Peter said? You're happy to answer that. You can unmute yourself. You can also type it in the chat.
Yeah, I just have something really quick. I was talking to a gentleman about this idea that he's got a building. It's worth $10 million, right? But he's making $150,000 $1,000 a year on this building, right? And I was explaining to him, I was like, look, like you can sell this building and defer all tax, and at an 8% pref, you're making more like
$800,000. Yeah.
$800,000
Yeah,
instead
10
of
million.
150,000.
Yeah, if he has no debt on it, if he had debt, that'd be different.
Yeah,
Yeah, yeah.
I was like, you're so able to maximize highest and best use. So if you're, kind of going back to the whole, Eddie and situation where you can bring yourself as a leg up on this business if there's competition by offering them, hey, look, like this is how much more you're actually going to make, like in the long run by going with me and letting me bring you this solution that's absolutely phenomenal, right? And it's just that's just something that I've been kind of using and showing side by side comparisons.
Draw a line down the piece of paper and draw a line down a piece of paper and just say, do you want an old depreciation schedule or a new one? Do you want optimal timing and be able to dollar cost average and diversify into different investments? Do you want to increase your cash flow or keep the lower cash flow? Do you want to be able to pay off debt or you want to stay in debt, depending if they have debt on the property? And just help them define that, and just literally put it on a piece of paper and just check all the boxes and say, do you want to be passive or active? Because you could be both with ours. Do you want to deal with, California is pretty easy. Like we beat up on California, rent control, eviction control, a lot of new regulations and different things that are coming along, or, New York, we do deals in New York and New Jersey. That's just, high regulation states. Or do you want to be able to diversify into these, pro business states and investments in real estate and cryptocurrency and securities when it makes sense? So that's the key. Like just help them to clarify what they want and then draw a line down on a piece of paper and just say, here are all the boxes on the right for the deferred sales trust that solve that. And then here's where you stay where you are. But I can say that real estate is like a religion, and the religion of a 1031 exchange is the doctrine, and it's the main doctrine. And I love real estate and the 1031 when it makes sense, by the way, when it's a buyer's market or you use value add, forced appreciation opportunities. But when there's not, it becomes your enemy, right? And so it's helping people to think about, instead of Blockbuster, thinking Netflix. But it's like riding a bike. You've never rode it before, so it's going to be a little bit uncomfortable, right? You're going to have to put some trust and faith in a third-party unrelated trustee. But by the way, you've already done that with qualified intermediaries. You put your faith in those third-party qualified intermediaries or those IRA companies that have custodians that are third-party. And so the key is something a little bit new, and you vet it and you go through it, and then you get comfortable. And then you're like, oh my gosh, this is Netflix. I'm never going back to Blockbuster ever again. And if you want to learn more about all of that, you can go to capitalgainstaxnews.com. We are up against one more question. We have one more question for either Peter, Jake, or myself. Does anyone else, or Pierce, does anyone have question, thought, comment? You can unmute yourself. You can put it into the chat. And otherwise, you could be thinking about inviting someone next week, every Friday, 10 a.m. Pacific Standard Time, 1 p.m. Eastern, to this mastermind. And also,
Eddie, do you want to unmute yourself and say hello from the UK?
Yeah, I was just thinking of doing that. Hi, everyone. I'm Eddie. My business partner, Connor, here is on the call too. So our situation, what Jake was just saying, is we're in the position of buying a few businesses. One of the biggest ones is 18 million. And they're in the position of, they've accepted our offer and they're all good to go, only because I mentioned the trust to them and that we can solve the problem that they're having. So after selling the business to us, they wanted to put the money into another business, other businesses, but they didn't know anything about how this trust works.
They want to reinvest. So as soon as they sell and receive the proceeds, they have another business they want to invest in. So that's one of the ways that this trust is a perfect fit for them.
Yeah, it was literally the perfect fit, and it overruled everyone else in competition with us. So yeah, it really helps us out.
You were in a bidding competition. I didn't know that. So this gave you the leg up and won you the deal.
Yeah. We only found out. I think I only found out yesterday, just as a last minute thing. And what you mentioned to us in our call early this week really gave us a leg up. So yeah, we're in a good position right now.
Well, Eddie, that warms our hearts. This is why we're here. We're here for the entrepreneur like yourself that are trying to maybe compete with the bigger, whatever, fancier, that maybe aren't as dialed in like you are with someone like Jake, to be able to use a strategy which makes all of the difference. And that literally is the number one challenge that people have before they sell, is this capital gains tax or estate tax. And if you can solve that problem, man, you help to change their family tree too, because that could be their biggest deal. And how many partners, all the stuff. That's amazing. Congratulations. By the way, where is that business? I'm just curious, what state is it in? Can you share that?
It's in Minnesota.
Okay.
I think it is. Yeah, I don't remember off by heart right now. It's a At the top of my head, I don't remember.
That's fine. Minnesota's fine. By the way, that's where the Monday morning quarterback came. It's funny that you say this, right? The Monday morning quarterback happened in Minnesota, across the street from the Minnesota Vikings Stadium, where a gentleman sold $20 million at the peak 2006, an office, like industrial property. And then 5 years later, after he was invested securities, investments in Deferred Sales Trust, conservative stuff, he bought it back at 60 cents on the dollar, 40% discount, all tax deferred, sold high, bought low. That's the Monday morning quarterback with the Deferred Sales Trust. And that's what changed it for me. Like, it literally was like, this is the future if people can understand how to do this. And really it was if I could help guide them, right? Because that was my passion. Like, I want to guide them and lead the way by doing the deals with my clients and then educating and coaching everyone else to do it as well. So I'm really excited, Eddie. Congratulations to you. We're looking forward to working with you. Jake, any last thoughts, and where can people find you if they want to find you?
Thanks everyone for being here. Thanks for joining us all the way from the UK, and everyone else here who's on the call. Peter, I think that you and I offline should get in touch. If Brett, you could connect us. I would like to beta test and try to break your new tool for crypto, for the clients, the consumers, to see what the risk tolerance is and everything else like that. I do a lot of beta testing for software in regards to investments in general, so love to participate there. And of course, people can reach out on the website. There's a booking tab and there's an 800 number. So 1-800-773-1848 or strategictaxsolutions.com.
Amazing. And Peter, if people want to get in touch with you, would you mind one last time was the best place for them to find you?
Yep, castlefunds.com. You can find out information, fill out a get more information tab there. We deal with the accredited investors only because of the type of investment product that we are in as a private fund. Jake and Brett, appreciate today, and we'll definitely want to continue our discussions.
Thanks, Peter. Pierce, if people want to find you, where can they find you?
Yeah, you can find me at kingdomluxuryrealty.com or on the podcast. I'm doing a lot of the episodes as there, so you can listen in, rate, review, subscribe, like, comment, share, post for all the algorithms.
Absolutely, Pierce. Thank you. And that's the Capital Gains Tax Solutions podcast, by the way. And I just want to thank everyone for attending or watching the replay of this. And as a reminder, most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options, and not having a clear plan is the enemy. And using a proven tax deferral strategy such as the Deferred Sales Trust and working with someone like Peter, right, to do passive investing into cryptocurrency, and someone like Jacob Miller to do anything investing, but securities and real estate and entrepreneurial ventures is an amazing way to create and preserve more wealth. And if we can help you at all with any of your exit planning or your wealth building, I encourage you to go to capitalgainstaxsolutions.com, start your Deferred Sales Trust, download the free ebook, check out the brand new book that's coming out, Building a Tax Deferred Exit Strategy. And it's the proven playbook for unlocking your ideal wealth plan when selling assets of any kind for yourself or your clients. We do have the Jake Miller in the book. He's in the book. And we also have the Kevin Harrington from Shark Tank in the book. I got a few chapters as well. So check out that on Amazon, coming to you soon. Thank you, everybody. Please rate, review, subscribe, share this with somebody, and we'll talk to you again real soon. Bye now.